Hey, welcome back, everybody. It's the three knuckleheads, or the two kooks and a Canuck, as
I
our
like that
Canadian
one.
friend north of the border might say. So we're going to talk about a couple of topics today: the semiconductor market and its massive rebound, and then the housing market and the dump that it's currently taking. Here in the States, we might even hear from Peter on what's happening in the housing market in Canada. But Peter will also be bringing his stock picks to us as our technical chartist. So what's driving this semiconductor market and the strong signs that it's showing? Well, it's driven by generative AI. Guess what? AI is still involved, and all the data center build outs as well. So we're going to talk about that, but we're also going to use it in the backdrop of where is this pullback coming from? And it's a lot of different economic factors that are pulling housing back. We can all just look at the headlines and understand, okay, it's tariffs, it's economic uncertainty, it's high mortgage rates, it's slowing price growth. These declining sales are having a huge impact on some of the young families. And as our younger statesman here, who is a first-time potential home buyer, Kevin, let me kick it to you first. Let's talk about the housing market and your own personal story.
Sure, not a problem. So I originally first got my first mortgage approval in 2019, right before the COVID pandemic. And I was banking with USAA. They had a wonderful program for military family mortgages and things like that. And then they canceled that program as soon as the pandemic kicked off. And so I've been trying to actually buy a house ever since 2019. And the reason why I'm going to be so vocal about it is because I made a massive mistake. If I do want to buy a house, I moved to Southern California. And I've been living here for about 3 years. And there's a massive housing shortage out here. Not only is there a housing shortage because of just the rental market and how many rental properties there are out here, but the amount of properties that are bought out by corporations is also driving up housing costs to the point where I'm currently sitting in a rental property. I'll go ahead and give you the numbers right now. I'm paying $3,000 a month in rent for a 3-bedroom, 2.5 bathroom. That is what Southern California is looking at right now. And about 10 to 15 years ago, this was a $250,000 house. They are skyrocketing. And so when I'm looking at the horizon, I'm looking at some of the first-time home buyer programs out here in California. They're great. They're fantastic. 5% down payments. Love that. But at the same time, I'm looking at the overall cost of this house, the long-term cost of everything, and I'm looking at it saying, man, you know what? It's reaching a point, it might be more economical to just stay a renter for a while here until there is a bubble burst again. And so that's kind of everything looking on the sidelines here as a renter, saying, I do want a piece of property, but man, it's a safer bet to throw my money at NVIDIA.
Well, before we get your take on the semiconductors, Peter, what's it like up north of the border? Obviously, we are isolationists down here. We don't care what you're doing in Canada. What's going on up there?
Well, let me tell you what's going on up here since you don't care. But yeah, no, you know what? It's a little bit of the same. It's quiet. Really, in terms of housing, and again, I'm no economist, but everyone could read the numbers just like they're putting out. Everything's been kind of fallen back since about 22. You're getting that slow bleed. It's not a crash, so to speak, but it's a slow bleed. And what I've noticed here, not only in my local area, but kind of in a lot of the major markets, is sales are consistently low, like 50-60% of pre-COVID sales, and pricing just holding lower and slowly dropping. And people are starting to give up, and they're just economic hardship, whatever it may be, mortgage rates being so high, they're just putting it on the market. I've seen some pretty horrible setups where people have lost a lot of money. I know personal stories where, people just planned to downsize, move to a different house, but unfortunately didn't sell the old house before they jumped into the new one, and man, are they taking a cleaning. So it's not good. It's not good. We're all hoping for better times, and so
Well,
far,
and I think we
not
always
happening.
have that situation where we're hoping for better times, but we're so focused on the times that we're in, we lack the clarity of hindsight and looking how these cycles happen. From the home builder side of things, there's a lot of home builders who are sitting on the sidelines as well because they
Yep.
don't want to put their capital. I'm not talking about your production builders and your larger corporations like Giddens across the country and things like that. I'm talking about your builders that are responsible for about a third of the industry, the guys that are building 10 to 25 homes a year. They've pulled their capital back because they're not sure what their profit margin is going to be with the fluctuating tariff situation. So with that, let's talk a little bit then about how does the Fed, Kevin, handle this and navigate this. You've got the surging semiconductor market, which again, based on the foundation built in 2024, is predicted to hit all-time high sales here in 2025. And then you have all-time sales lows potentially in the housing market. What do you think the Fed reaction should be?
You know, to be honest with you, as much as I, from a personal standpoint, would love to say that they should kind of reduce rates, help the housing market, prevent it from collapsing, help first-time home buyers actually achieve that part of the American dream and all of that, you know, before we give up on it completely, I am going to actually say that they need to sustain things and put more money in and focus onto the semiconductor and the AI sector at large. And the reason being is because, and I'll go as far today to say that I'm firmly independent in terms of my registration. And when I look at what's currently happening, we'll all, whether you're on the left or right, you can admit that the situation is volatile. And over the next 3.5 years, it is going to remain volatile. And so if there is something that we can hedge our bets with, and that's driving, like, I don't know if you guys did it, but I cashed out NVIDIA just the other week. I made 50% on that one. It's probably one of my best plays that I've ever done in my entire journey as an investor here. And I cashed out on it, and I immediately started looking for other AI plays rather than going onto Zillow and looking at the price of homes or anything like that, because that's what's working. It's the same reason why everybody's flocking to crypto. It's the same reason why, this is not a joke, it's the same reason why Pokemon cards have outbeat the S&P 500 over the past 20 years.
Kevin.
Yeah,
Only
how do
you
you
would
even
know
know
that.
that?
Congratulations.
How do I know that?
Peter,
Yeah,
did you know
we'll
that?
talk about that one another day.
Are you trending with the? Are you down with the Pokemon vibe?
Absolutely, absolutely. I went to Worlds just last week. It was a blast. But what I'm getting at here is people are looking for hedge bets. That's why you're seeing all of these millennials flocking back into these fandoms. It's why you're seeing us forsaking things like house ownership. It's why you're seeing us focusing on other things in the economy that are actually producing results or producing some form of happiness besides a white picket fence in a yard, if you know what I mean. And so that's more or less of where my position is. If semiconductors and AI is booming, let it keep booming. Don't pump the brakes, because if you pump the brakes, that money's going to go to another sector and you're going to stop this boom. Let it keep booming and let it fizzle out, and then we can fizzle back on rates.
So Kevin's down with the Costco boys. They bring the boom. He brings the boom. He loves Pokemon. Peter, I love stock picks. That's why I'm here. That's what I'm here
Yeah,
for.
well, let me just say one thing about Kevin. First of all,
I want stock picks. All right, go ahead.
well, hold on. Things don't fizzle, Kevin. They pop. So
Fair.
you got to be careful what you ask for here. You know what I mean? Very rarely do things fizzle. So that's one point that I wanted to make. You know, I'll get into the stock picks. I'm not going to go into Pokemon and fizzling. All right. So let's get into the stock picks. But yeah, be careful what you ask for. And you know, it's the party doesn't continue forever. But anyway, so the two companies I've got have nothing to do with housing, fizzling, Pokemon. They have to do with two other themes that, well, at least the first one does. It's an interesting theme here. It's the company's name is Beyond Oil, and they are duly listed both in the States on the OTCQB symbol BEOLF and on the CSE in Canada symbol BOIL, BOIL. It's an interesting company. They basically have a patented technology with clearances with the FDA and Health Canada that reduce harmful compounds in frying oil and address health concerns. You know, we all know that in restaurants, they use the same oil over and over and over. That's not healthy. That's not healthy, and yet it's common practice. So they've got a solution for it. And it's an interesting stock setup. I think a lot of it has to do, like the breakout that they've had of late has a lot to do with Trump's nomination of Robert F. Kennedy Jr. You know, they're all trying to, you know, America's trying to go the healthy route, and this is a company that's definitely going to benefit from that. So if you look at, I looked at BOIL, specifically the Canadian symbol, but the US one's trading at tandem with it. You'll see it's got a bit of a wedge pattern going on here the last few months, and it's just broken out of that downtrend, and this can have a nice run. This could easily go to, you know, that 420 level, maybe even hit the all-time high at 505. So it's got a lot of movement. Again, we're talking about the Canadian side.
Gotcha. Real quick question on that one, Peter. I'm looking here on Google for it, and the AI tool, I don't know if it's making a mistake or not here, but is this company Beyond Oil connected to Beyond Meat?
No, it's not. It's not.
Okay, no. Okay, that
Well, as
must
far
be
as
an
I know,
AI
it's
mistake
not.
here.
No.
Okay, understood.
Yeah, completely separate entity. I know it is. It could be confusing for sure. So
Gotcha.
that
I'm
would
sorry.
be my number
Continue,
one.
please.
Yeah, that'd be my number one pick. Or not my number one, but my first pick. Second one, believe it or not, it's Porsche. It's Porsche. It's POAHY on the OTC pink sheets. This one's interesting, and you know, look, at the end of the day, Porsche, like all other car manufacturers, it has its tariff headwinds, but it's doing well fundamentally, and the technicals look solid after this multi-year decline that it's had. It's kind of a scenario where why not make an entry at these levels? So, like, I'll say one quick story. I've got a friend here that's been always a big BMW guy, and he's saying, and he's had a BMW for like 15, 20 years, always the newest ones. He wants to go into Porsche. He's saying that that's where everyone's at. Everyone with a BMW and a Mercedes are moving to Porsche. So I take that anecdotal evidence and be like, you know what? Porsche's in terms of just kind of the in product, if you want to go. And again, when you look at the economy in North America specifically, the higher end's doing fine still. You know what I mean? So Porsche should do fine despite tariff headlines because all the other manufacturers have those same problems too. So yeah, the breakout's there. It's been a multi-year downtrend. It just broke it in the last couple months. This one could easily run to, you know, 550 or so would be a pretty good level to consider. You know, an exit. So yeah, I mean, I like that one. So again, nothing to do with you know, the themes we talked about at the beginning of this call, but two interesting plays that I think could net investors some near-term profits.
Kevin, I feel like don't buy a house, buy a Porsche.
Buy a Porsche.
That's kind of my neighbor just pulled in with a 2024. I think they're called the Taycan or something like that. The new EV sedan that they just started rolling out with. Gorgeous vehicles. I mean, to be honest with you, it'll probably depreciate less than a house. So yeah, I'll probably do something like that here. But yeah, gorgeous vehicles.
Or just
What's
buy the
that?
stock.
Say that again.
I said just buy the stock. You don't have to
You
buy
know
the
what?
car.
At $4, that's a steal too. That looks like a very, very good price point. So yeah,
So
absolutely.
one thing that's coming up while we're talking, I'm just looking at some of these news things flashing across the ticker, is how many different people are coming saying that they're wary and don't believe a September Fed cut is a done deal. So Hammock is the latest Fed official to push back against the market view that a rate cut is a done deal. So I think we're all kind of saying the same thing, that it's probably a push for now anyways. That's all I've got for today, guys. Anything else from you guys?
No, I think we're good here. Let's look, I'll say my point here. I hope there is a rate cut. I think the economy needs a little bit. I don't think tariffs are moving prices up as much as people expect, and hopefully the economy can start humming. It's slowly grinding lower. That's just my opinion. That's my take. But other than that, get a Porsche.
There you go. And then just in closing, I'll say, as much as I would love to see the housing market boom up, I mean, we didn't even broach this topic here, but there's still issues in the supply chain, the quality of materials in the building market, all of that stuff too. It's a wide issue. And I don't think a Fed rate cut is going to be enough to fix the housing market before a collapse. And so as someone who doesn't own a home, I say, let it burn down. Let it go ahead and burst that bubble. Let me buy some foreclosed home and let me finally achieve that American dream through foreclosure. But that's my 2 cents there.
All right, for your independent registered anarchist, Kevin Gray, I'm Stuart Smith. And for our Canuck north of the border, Peter Safransky, we'd like to say thank you for tuning in to our useless opinions.